Thank you, Robert, Dr. Robert, for inviting me. I think to summarize, what Burgundy has done to the Nordic market is twofold. Basically, we educated and introduced multi-venue trading to the Nordic banking community. Number two, we worked very closely with the banks, who are also our stakeholders, to remove as many obstacles as possible, for example, with data, in a product which we call Nordic Light. So if you are a retail customer or an institutional customer, but in particular if you're a retail customer of the biggest Nordics banks, you will actually find Burgundy prices, consolidated order books at no additional cost, side by side, live in most of the bank's trading applications, which we are quite proud of, because data, we soon realized, is one of the major obstacles against vendor competition.
So Olof, can you describe the geographic diversification of the offering on your platform? Is it all just one country?
No, I think the Nordics is a bit special in that we have some very local trading rules, something which we call on-exchange internalization. We have full disclosure ticket, because we have millions of retail and institutional customers who want to follow their order from order entry until the trade is done, and they also want to see exactly which broker firm did the trade. So it's kind of a little bit different from the way you do it in London and the rest of the world, but small details, and we specialize in catering to that Nordic community only. So Burgundy cannot compete with Chi-X or BATS or London Stock Exchange in European stocks, but in the Nordics we have a space.
Thank you very much. Olof, we were talking earlier about the impression of the buy-side community. And in fact, Mr. Marin talked about the fact that the buy-side community has been one of the fastest growing. How have you been engaging with the buy-side?
Well, quite recently, I met with approximately 60% of the asset under management in the Nordics. Mind you, that's probably 15 institutions. It is a small market. Still, I think our interviews with the buy side raises two issues. Number one, the buy side got all the benefits of automation in the securities industry, but they still haven't done any investment. The sell side, after MiFID, got hit by all the technology costs, the regulatory costs, and of course they are now thinking about how long can I sell something below cost of production? And that goes even for the biggest banks. So I think we will see some kind of consolidation going further in all kinds of platforms, be they exchanges or MTFs, not necessarily mergers and acquisitions. I mean, I like Sepp's idea that the cooperation to reduce complexity and reduce the number of platforms in the industry is necessary to get the profitability back again.
Thank you, Olof. Per Loven, may I invite you up to the stage, Per from Liquidnet, from the Head of International Strategy. And while he's coming up, Olof, one more question. Actually, your customers are the sell side. How are you getting closer to your sell side customers?
Well, again, the community is quite small, and I think that's also where we have an edge. We have 30 plus customers in total, half of them in London, half of them in the Nordics. So I think one key ingredient is to have very good personal relationships and FaceTime with your customers.
Thank you very much. Well, Per, just to follow on with that question, if in certain markets there's a concentration of liquidity in a handful of participants, and yet from Liquidnet's perspective, you are accessing over 600 asset managements worldwide, do you have an idea about the relative concentration in your membership base and how you're also planning to diversify and develop your international strategy? Thank you.
Thank you, Robert. Well, I do. I think our membership base really reflects some of our history and where we want to go in the future. So Liquidnet started in the US back in 2001, and then we grew out to Europe in 2002, and we then expanded into Asia Pacific, so on and so forth. In terms of the asset managers that we trade for, I would say that today roughly 60% would be based in the US, probably another 25% in Europe, and then the rest scattered over Asia Pacific and Australia. But that is constantly shifting. We can see that as much as we see investment flows going overall out of the US and out of Europe into Asia Pacific, into Latin America and other places, we also see our client base slightly shifting towards that aim.
And how are you looking to build on that?
Well, for us, being global was never really a question as such. It was something that we adopted from the start. If you think about it, we are there to help our members, the asset managers that we trade for, to implement their investment decisions as efficient as possible. And they all trade on a global basis, or most of them trade on a global basis. So we very quickly saw it as a strategy to cover as much as the world as possible in terms of investment opportunities. We trade 39 markets today, and that's constantly growing. So what that means in terms of our strategy is, we needed to supply them with as many markets as possible to trade, and B, we needed local presence in those different financial centers. So for being a firm our size, we have an extremely wide global coverage. We have offices out of the US, Europe, but also Asia, Pacific, Japan, Australia, so on and so forth.
Thank you. Olof?
No, I think this ties in quite well with my buy-side conversations I've had recently. Large asset managers in the Nordic typically have 50 to 70 counterparties, and 2012 it's going to much more about if your broker doesn't have a SOR, he's out. I mean, that race is gone. It's now a question on who has the best algos, who covers the most market, and who has a decent clearing and settlement cost infrastructure. I think that is where we see the game going. And all the buy-side guys want to reduce the number of counterparties to below 10.
Well, Olof, thank you on clearing and settlement. I'm going to come back to that once we've got our panel full. In fact, this is a good time for me to invite Luca. Is Luca in the room? Luca Bandinelli from EuroTLX. And while he's coming up, let me ask each of you, today, Per, Olof, are either of you trading fixed income in addition to equity products on your platform?
We don't today. We trade equities and equity-like products. So that means we're banded into ETFs, and we're looking at potential opportunities in the derivative space and so on and so forth, focused on exchange trading only. Fixed income today, no. In the future, quite possibly.
Olof?
We don't. We had some initiatives to look into it, but fixed income is mainly buy and hold, unless for the largest investors, and that's OTC in Scandinavia.
Well, you know, it's very interesting because, ladies and gentlemen, that very first chart that we put up on the slide showed that in terms of investable assets worldwide, the financial assets, vast majority are non-equities. In fact, Luca, tell us a little bit about EuroTLX and the fact that you are doing fixed income products on an order book model. Luca, thank you. Well, sir.
Okay, thanks. Well, yes, we've been trading electronically bonds since year 2000, and with quite a success. And it's not true that it's only buy and hold, at least not in Italy. We were born as a retail market, so the final investor would be the man on the street. But when we talk about retail customers, it's actually a very wide range of players. And you have a community of around 15,000 day traders, heavy traders, who are doing actually trading on a daily basis on fixed income securities. So, of course, there's a mixture of investors' preferences and market structures. But I think that trading bonds can be done as equities if you're given the pre-trade transparency, post-trade transparency, and all the information they need.
Well, thank you, Luca. Let me just follow up on that. It's very interesting demographically, worldwide, The generalization is that in Europe, it's mostly institutional investors. In Asia, it's mostly retail investors. And in the Americas, it tends to be a balance. Italy is an outlier, a positive outlier in developed Europe, and having a very strong retail segment in its country. Luca, tell us, as retail investors participate on products on your platform, are they going through intermediary brokers to get to your platform, or are they directly accessing your order book?
No, they have to come through a broker. So our clients are aggregators of retail flows. So they can be either big commercial banks or online brokers.
Thank you very much. Well, this is a good time to also invite our next expert to join, Constantinos Antoniades, the chief executive of Vega-Chi. And as he's coming up, Olof, you have also carved out a great success in another internationalized flavor of exchange-traded funds. Can you tell us about the relative strength you have in ETFs?
Well, I think local products, the ETFs, are extremely popular, especially the leveraged ones, as we've seen in the rest of the world, and in particular America. So those are primarily retail-driven, and we are becoming more and more a retail-oriented flow platform. So I think that's the reason why.
Thank you. And Per, from your perspective at Liquidnet, we heard that the average trade size on Liquidnet is quite large. Traditionally in shares, do you also match up in exchange-traded funds?
We do. I mean, the average trade size is really what sets Liquidnet apart. If you look at just some stats, in Europe, it's around $1 million worth of shares on average execution size. That doesn't really change. I mean, we include everything in those numbers. So be that, core equities or GDRs or ETFs, so on and so forth.
Thank you. And Luca, on your platform, in addition to fixed income, there are fixed income-based exchange-traded funds. Do you also have those on your platform?
No, we don't have them yet.
Not yet. Well, listen, I'm really delighted we have Constantinos on our panel, because while we have expert platforms in equities and EuroTLX in bonds, Vega-Chi, I understand, is trying to do the equity-linked product, which have a flavor of both. Constantinos, tell us a little bit about Vega-Chi and why you think a multilateral trading facility may have an offering for the world.
Sure. Well, first of all, Vega-Chi has two products. One is equity-linked, which is convertible bonds. The second one is high-yield bonds. When we look at the fixed income market, it actually comes in many shapes and sizes, despite some of the impressions in the equities world that there's this big one monolithic pool of products. It ranges from obviously the very liquid, let's say G7 government bonds, to the very illiquid, such as syndicated loans. In the middle, there's actually a very big part of the fixed income space, which is, in our opinion, in the sweet spot between enough liquidity, while at the same time enough potential savings to institutional investors for such products to be traded electronically. On top of that, from conversations with our clients, anonymity is something that they value tremendously. And in the OTC space, I think it's fair to say that anonymity is not as strong as, let's say, in the electronic space.
Thank you very much. In fact, it's very interesting. I know we've got a distinguished representative of IMKB, the Istanbul Borsasi. I think one of the great strengths here in Istanbul is that the exchange group can also do fixed income as well as equities. I think it's one of the beacons of the markets worldwide. But ladies and gentlemen, with our distinguished panel, are there any questions in the audience? Because I have a question myself. So while you're thinking of your questions, Luca, let me come to you, because there's been a lot of discussion in the upcoming framework of MiFID II, and the focus on best execution, which traditionally, since 2007, in the European exchange space, has had focus on best execution of equity shares, where best execution was defined as a process to deliver the best result on a continuous basis. How is the concept of best execution evidenced on an electronic platform, particularly for fixed income? Thank you.
Well, in Italy, when MiFID I came into force, it actually worked on the fixed income space instead of the equities. If you count regulated markets, MTFs and systematic internalizers, you have more than 20 trading venues in Italy competing more or less on a subset of instruments, and for which best execution rules apply. Several firms have developed smart order routers, and so we already have a strong competition in the fixed income industry, much more than on the equity side.
Very good. And Constantinos, from the Vega-Chi perspective, how are you looking at members or helping them evidence best execution on your platform?
Sure. Obviously, in our technology, you can see any point in time fixed firm prices in many instruments. And this is probably one of the very few venues in Europe currently that you have at the institutional level this capacity to actually look at prices and let's say compare the price you see on an exchange with the price that you see from an OTC broker and execute accordingly. So I think it has helped both in terms of pre-trade transparency and allowing institutional investors to compare maybe in a more in a clearer way the various offerings, but also on a looking at the post-trade transparency that we have provided. One can look at Vega-Chi and see where this particular instrument traded, let's say, this morning, which is something that is not currently available in the OTC space. So we do help institutional investors achieve best price execution by giving them a lot of the information before they trade, as well as information about recent trades to be able to make the best investment decisions and get best price.
Thank you. Constantinos, I will come back to you and ask you questions about size of market and how that dynamic is working. But Olof, let me come back to a point that you raised earlier, which was the point of clearing and settlement. It's interesting to note that today, on the trading floors throughout Europe, the post-trade model has now become a priority for us on the trading floors to try and address frictional costs. What are you doing at Burgundy from a clearing and settlement model, please? Thank you.
Well, I think all venues and the MTFs, including ourselves, are teaming up now and they're catching up with the interoperability model. But I think that is the easy part for the community to establish. The tricky one is the STP or lack of STP flow from the buy-side guy at the top of the food chain to the bank.
STP?
Sorry?
STP, is that
no, the
straight-through processing?
Straight-through processing from the buy-side guy to the bank and then ultimately to the CCP and the intermediary. I think that is where you see a lot of investment and consolidation is going to happen in the next couple of years, because in the Nordics, for example, all banks are struggling with this to get the cost down for clearing and settlement. This wasn't the problem when clients paid 15 basis points, but it is a problem when your clearing and settlement cost is 2 to 3 times higher than your transaction cost, the trading fee.
Well, thank you, Olof. It's very interesting because, ladies and gentlemen, the anchor session today will be all about interoperability of clearing with some of the key thought leaders in the industry. What does interoperability mean? What it means is the ability to trade on a platform and have a choice of clearing party such that investors operating on an international scale can get economies, volume discounts, and the ability to trade the instrument in multiple places but ultimately settle in one place at home. In fact, Per, I believe the SLS service, the Swiss Liquidnet service, also is live on a fully interoperable model.
It is excuse me. It is indeed. I think we operate a couple of different clearing settlement models within the Liquidnet umbrella, depending on what service you're looking at. Liquidnet as a broker, we face off to our members, our institutions on a bilateral basis, but we have a CCP solution interoperable in the SLS space, as well as certain other spaces when we deal with other brokers. But also, I just wanted to make a point actually on best execution, Robert, because I think even in the equity space, it's a notion out there that still has much to offer in terms of debate in my mind. So every firm has a best execution policy. That's something you can craft together fairly easily, and it describes how you do business and how you fulfill this to certain regulatory requirements. I think we should look at best execution more as actually the value you provide to your client, to your member. To put that into perspective, and we have a very simple best execution policy, but that is because we provide a very distinct and high value. So our average member, the average asset manager that trades with us, their average order is around 25% of ADV in that particular stock. Every time they go to market, they face a massive challenge. How do I implement this investment decision without detrimental impact in the market? What we do is give them an option to really minimize that impact. And to put some numbers on that, there's a firm in London called Best Execution Liquidnet that does analysis around that. If you look at the average trade that we do and put that into basis point, we save them 157 basis points. Now, that to me is the type of discussion we should have around best execution, not just a policy on a paper. What does it actually mean for the client at the end of the day?
Yes, thank you. Olof.
I think this is an extremely important point. Sadly enough, but this is also an opportunity for all the sell-side firms out there. Out of the 15 conversations I had in Scandinavia, 4 of those institutions are doing some kind of TCA. So it's an educational process, and those who do their TCA properly, they don't care so much about the sell-side broker's execution policy anymore. They would have their own best execution policy and give to the broker and say, this is my best ex policy, take it or leave it.
Thank you. I mean, it's a very interesting point that in Europe, the dynamic of a principles-based regulation is not to prescribe what is best execution, but to allow the investors to evidence their power by reviewing the brokers and the quality of execution they give. So we hear from Per about the potential for price improvement and more visibility. I think we hear from you, Olof, that in the Nordic markets, 4, i.e. the minority of brokers and clients are actually trying to measure this to try and get a better result. Luca, from a fixed income trading platform point of view, are you also trying to measure the potential price improvement? Do you match only at bids and offers, or can you also match at midpoint?
No, we match bid and offers, and what we try to do is, well, we actually benefited from best execution because until MiFID, our market share was quite low. Once best execution rules came in, we had to be recognized. And due to the fact that our microstructure is quite unique, it's a hybrid model, it's order-driven with at least one liquidity provider on each security. In many, many cases, our prices were the most competitive prices on the market. So in order to convince brokers to join the market, we developed a market performance index, and we were like comparing on a random basis the book for several sizes. Usually the average size of a deal on our market is around 50,000 euro. And we would see if the spread on our market would be tighter than the one of the reference market, and then it counted as a victory. And in that case, we would have like 70% of success.
And Luca, just give us the name, for example, of one of your more liquid instruments that trades on your platform, for example.
Well, of course, Italian government bonds, but sometimes the most traded security can be like a bond from Venezuela, or corporate bonds from Italian Fiat to Commerzbank or whatever. So it depends from time to time.
And Luca, if as a member on EuroTLX, I match in one of these corporate bonds on your platform, how is it cleared and settled?
Usually it would be cleared in that case on EuroClear or ClearStream.
EuroClear, traditional to the way people would do it outside of the electronic platform.
Yeah.
Very good. From a Vega-Chi perspective, tell us about your post-trade model, but also about the size of the potential market in equity link. Sure. Thank you.
The size of the market is, I would say, a bit unclear, given that there's little information about and little transparency in these markets. But based on our estimate, between the European convertible bond space and the European high yield space is somewhere between $550 and $700 million of traded volume per day. We think that the size of the market could actually increase with greater confidence among buy-side institutions about liquidity an ability to exit and enter positions at lower transaction costs. And I think, one of the benefits of MTFs is that hopefully they will facilitate improved liquidity and therefore increase trading volumes in these markets. In terms of the savings, we estimated that each time a client trades on Vega-Chi compared to the OTC market, the savings are on average about 30 basis points on each side of the trade. So between the two sides of the trade, then about 60 basis points, which on an average trade size of $2.5 million on Vega-Chi, I think this is significant. Our post-trade model is different than most other exchanges and MTFs. We currently use a tri-party settlement agreement that is offered by BNP. And we're also in discussions about adding a second model, which will probably look closer to, let's say, some of the traditional CCP-related models.
Right, so currently BNP is acting like a central clearing party.
Correct,
right.
Yes.
And that's good. Ladies and gentlemen, any questions for our expert distinguished panel? Yes, at the back. Please state your name and your organization. Thank you very much.
Morning, Robert. Simon Gibbs. I'm the sales director for BT Radiance for Europe, Middle East and Africa and Latin America. I'm curious from the panel's point of view. We talked about technology and different communities and all the rest of it. I'm curious as to how extranets play a big part in both getting the information out and in, and how it lowers the total cost of ownership to all of your members, both providing information and trading. I think Per is probably best to answer that one.
Thank you, Simon.
So Liquidnet has a rather unique model in the terms of how we source liquidity, how we facilitate trading between institutions globally. We're an extremely technology-focused company, and from the start we had an innovative solution as to how you integrate with asset managers, order management systems, and literally pull in all their order intentions. Anything that doesn't have in the market at any given point in time, that's how we create our liquidity pool, and that's how we match up orders. That's also how we create the world's largest liquidity pool. Obviously, we're reliant on various networks to do this. We really work with any one of the independent EMS, OMS providers out there, third-party networks, so on and so forth. And for us, it's not so much a focus of working with X over Y or who's the best. We really just sit down with our members and we talk to them. Who do you use? What's working for you? How can we make this most efficiently? And then we create a solution for that. So to your question, is it important for us? It's absolutely the core of our business, and we have relationship and commercial arrangements in place with any of the independent providers out there.
And Olof, maybe you could add to that answer by giving some color on how the role of these extranets over time have evolved. Thank you.
Well, I think they are extremely important as technology and trading goes faster and faster. The financial ecosystem can really make a difference as an exchange, whether you get the trade or not. So it's really crucial that you work with the right partners, and also that your customers are happy with your partners.
Thank you. Another question at the front. I believe that is Graham Dick, one of the founders of Chi-X Europe, which became the largest order book in Europe at the moment.
Well, thank you, Robert, for the introduction. More modestly, I would just like to ask a question. We heard from Seth in the previous panel that he thought it was unlikely that there was going to be further consolidation in the regulated stroke national market space. However, when we look at the European MTF space particularly, and you have your panel members there, I'd like to know their opinion on whether they are ready to consolidate, and if so, when.
Thank you. And I guess for the audience, for those of you that have been reading the press, Chi-X Europe and BATS merged at the end of 2011. Olof.
No, I think it absolutely makes sense, because what I mentioned earlier is you can only have so many platforms in a flat or declining market. So I think it's more likely that you see MTFs being taken over or cooperate across Europe, then you see the big exchange groups.
Thank you. Per.
I think absolutely we're going to see that, but maybe not for the reasons that that people naturally would look to do this for. So look at the MTF world in Europe. We have the vast majority of MTFs, which is everyone that popped up after November 2007 when MiFID made this possible. It was a low-cost, low-latency model in direct competition with exchanges. We have a number of those. They're on one side of the spectrum. On the other side, you have someone like us who's, I would say, high-quality, high-latency service compared to these players, but we're not in the same game, and we do totally different things. That's a high-margin business that doesn't necessarily need economies of scales and consolidation to thrive. It needs innovation and partnership, and that's exactly what we're doing. But going back to the other side of the spectrum, is there room for consolidation? Absolutely. Simply look at profitability of many of the platforms out there. They cater to the same segments of client. They have very much a similar offering. Many of them are not making money, and they can thrive on economies of scale. So I think you have a recipe for consolidation right there.
Thank you. Luca.
Well, in the fixed income, it's still at the beginning, so actually we are seeing more MTFs coming out. Last year, the Cassiopeia project brought you to Bond Match, Galaxy. MTS was thinking about launching MTS Credit, so I think that in the fixed income, we will still see more trading venues coming out, especially with MiFID II.
Thank you.
I agree with the last comments. I think the fixed income space is still in a high growth mode and what I call a shifting landscape mode. So I think it is very unlikely consolidation will make sense until probably a few years from now when some of the landscape has been more properly formed and possibly the industry in the fixed income space reaches more maturity, at which point in time probably cost savings and consolidation matter a lot more than the marginal opportunity.
Thank you. Any final questions from the audience? I have, yes, sir.
I agree that consolidation makes sense, particularly in the European area, given the fact that there is this broadly acknowledged fact of the fragmentation and the competition, not only among the MTF platforms, but also with the exchanges is another crucial element. But there's this initiative, I would say, of overhauling MiFID. It is called MiFID II, and there's this new category, it is called OTF. I'm not sure how it is going to affect your business, but can you please also address this issue in a way that you are seeing the future of the MTF industry, given the fact that exchanges are losing some of their liquidity over to you, and there are going to be some new categories as well to compete with?
Thank you. That is an excellent question. We will also have a more full explanation around OTFs and MiFID later, but before we go, quick fire answer to that question. Will OTFs have impact on your model?
I don't think so. I think eventually the same companies will operate both OTFs and MTFs accordingly to their client needs.
I still have to understand what OTFs are, so.
Thank you.
Looking at it today, it's a bit unclear, so it's a bit hard to say, but my answer would be only if we choose to do so. We're an agency broker that operates an MTF in Europe today. Depending on what OTF will look like in the finalized version, could that be an interesting possibility for us? Potentially, but we will await and see what happens.
I think the current OTF proposal is dead. I can't see anyone using it.
Right, well, ladies and gentlemen, we've had a remarkable discussion with our expert panel. After the break, we will be hearing more from the masterclass that's been set by Seth Marin about how exchanges and platforms will be diversifying, differentiating, and developing. But ladies and gentlemen, let's thank our expert panel. Thank you very much. Thank you.